All right, it's business lunch, and let's take it straight across to the big earnings that have been announced. Federal Bank has just announced its earnings. As far as the stock is concerned, it has reached the high point of the day, and gross NPA coming in at 3.11%, net profit at 266 crore rupees, which is a beat compared to the poll that we had of around 237 odd crore rupees. As far as net NPA is concerned, 1.78% versus 1.72% on a quarter-on-quarter basis. In fact, we should look at what the expectation was when it comes to the asset quality.
The NII actually is better than what the street was estimating by a tad bit, but it's the little bit of the asset quality deterioration that the bank has reported. The stock, though, is reacting. It's up almost about 4.5%. I think Abhishek is with us. Abhishek, any more details on the numbers?
See, the fact is that everyone knew that there is pain in Kerala in terms of the natural calamity that you saw. But the headline number, that is the NII number, is still much better than we anticipated. We had a NII of 998 crores. It has come in at 1,022.5 crores. So that's an uptick of about 14% on a YY basis and about 4.3% on a sequential basis. And if you look at the interest income and interest expenses, they have been able to hold on to their yields while the cost is still under control. We need to get finer details in terms of NPAs, but largely known, the stock had taken a huge beating in recent trades on the fact that there was worry on street that Kerala book might have got impacted, but it is not the case. As you see, the NII growth is much better than our poll. The profit growth is much better than our poll.
So, if you look at the absolute numbers of gross NPAs, it's gone up to 3184 crores versus 2868 crores. Now, one could argue that the gross NPAs have deteriorated a tad bit. But Abhishek, suffice to say that, the street was perhaps aware that the issues would get a bit worse because of the Kerala floods. Having said that, it's not such a bad number. I mean, not too much of a deterioration in asset quality.
Exactly. As you mentioned, it's an uptick of 11% on a sequential basis. Quarter-on-quarter gross NPA in absolute value has increased by 11. So that 3,184 crores compares to about 2,869 crore in the previous quarter. Net NPA at 1,796 crore. That compares to 1,620 crores. That's an uptick of close to 11%. So the fact is that everyone knew that NPAs would come, but the ratio has not increased. So I'm just trying to figure the balance sheet growth in the meantime.
Okay, 288 crores is the provisioning that they've made this time. This compares to 199 crores last quarter. That's about a 45% jump in provisioning. The loan growth is very strong, though. I think they just flashed the loan growth.
The loan growth is at 25.2%. I'll just run through the balance sheet numbers. The deposits have grown by 21.6% on a YOY basis, while it has grown by close to 6.25% on a sequential basis, which is pretty strong. You look at the loan growth. Now, the loan growth has come in at 25.2% on a YOY basis and about 5.7% on a sequential basis. So, if I look at the loan growth, the loan growth is the highest in last, let's say, five quarters at least, 5-quarter high loan growth, and that actually speaks volume in terms of the loan growth. Even on sequential basis, the 6% loan growth is much higher than we were working with, because everyone anticipated that due to Kerala floods, the loan growth, as we saw in South Indian Bank, the loan growth was inching 16, 17, 18% and it slipped to 15.5%. There was a worry that Federal Bank's loan growth will be 20% or below, but you look at the loan growth at 25.2%, it shows the strong demand that is there, and Federal Bank is able to meet the same.
All right, Abhishek, thanks a lot for that. So those are the couple of reasons why the stock is doing very well at the moment. A loan growth of 25% despite the Kerala flood impact. The asset quality deterioration not as bad as expected. Yes, it is an increase in gross NPAs, but about 11% on a quarter-on-quarter basis. It could have been worse given the situation. And NII growth is also better than what the street was estimating. That's the sum and substance of Federal Bank's numbers.
Oh, yes, Sonia. So the absence of any negative news revenues more than expected. So the asset quality is better than what the street was probably penciling in. But we are in the midst of a very hectic earnings season, and key earnings to watch today is also coming in from Hero MotoCorp, and it is going to report its numbers today. Sonia will tell us more about the expectations. How is this quarter expected to be, Sonia?
It's expected to be a weak showing this time around. That's because the volume growth has slowed down substantially for Hero MotoCorp, on account of which the revenue growth will be in single digit, just about 7.2%. Now, we're expecting a volume growth of around 5.5% this time around. This compares to 14% last quarter, 24% in the quarter before. Rural sentiment has slowed down. Fuel prices have gone up. All of that has impacted retail sales quite a bit. Not just that, that's the graph as far as volume growth is concerned. Not just that, raw material prices have gone up, and that will impact the margins this time around. So we're expecting a 200 basis points fall on a year-on-year basis in the margins due to higher commodity costs and expiration of the Haridwar tax benefits. So all in all, disappointing numbers. But the stock to focus on really is Federal Bank. Almost a 7% up move now on Federal Bank. Just pull up the intraday chart. Looking pretty good. As we said, the big number to focus on really is that strong loan growth of 25%. Abhishek, anything else that you've picked up? The NII growth is also 14%, not bad in a tough time like this. But anything else that you've picked up?
See, the operating profit, despite the fact that, NII growth is at just 14%, we know that Treasury is not a very good environment for all the banks because they are seeing Treasury losses. The operating profit growth is close to 20%, 19.6%. Over the last 2 quarters, the operating profit growth was in single digits. That is 7% in Q4 FY18 and 8% in Q1 FY19. So this quarter, they have returned to double digits, and that to healthy double digits, that is 20% on the operating profit level. Therefore, you are seeing such a strong growth in the profits with asset quality under control, or not as benign or bad as anticipated by the street, and you are looking at a healthy profit growth much higher than our poll.
All right. Thanks so much, Abhishek, for giving us that perspective. So that stock is seeing some bit of selling at the highest level, but good operational performance and better than expected asset quality as well. But the stock to focus on is ONGC. 8 to 10 buybacks under discussion for FY19, including oil companies like ONGC. We have been telling you it's a season of buybacks, and government officials are stating that ONGC is also on the radar as far as buyback announcement is concerned. That's impacting the stock. It's gone to the high point of the day, over 3% gains at the moment. But we also have to see how the market conditions are and when will the government really strike. Government will not interfere in the daily pricing of petrol and diesel. That's some bit of consolation that they are bringing in at the time when oil prices have been on the higher side. And we also had seen the announcement as far as the subsidy burden is concerned. So ONGC is the stock to watch out for. Many buyback announcement has been on the anvil. And Sapna Das joins us with more details. Sapna, slew of buybacks by the government expected, ONGC on the radar.
Well, yes, definitely on the radar. But as I have indicated, 8 to 10 buybacks is what probably the government has planned. As of now, it's a dynamic situation, so always, this kind of information should be taken with a bit of caveat. But having said that, 8 to 10 is what appears to be under discussion as of now, and I suppose the plan as of now is to try and raise approximately, around 20,000 crores from these buybacks. ONGC is one that you have already pointed out, but I suppose the discussion is on with the oil sector in general. So probably within a few weeks, we may have some more details. But the top number to go with is approximately 20,000 crores is what they may be targeting at, raising money from buybacks. And that's definitely, that historically also, buybacks have always been a part of your disinvestment program. So that appears to be on track as of now. Some of the companies we have already put out, I think 3-4 of them, I think the board approvals, at least for 1 or 2, probably have already come in, and some may be still under discussion, but this is a space to watch going forward as well.
Okay, let's see whether these forced buybacks from the government lead to any derating of these PSU stocks. In any case, a lot of the PSU stocks have been under pressure lately. Today, although, is a good day. BPCL up in the green, Ongc up about 3%. But let's see which way things go. Let's move on though. Cable TV consolidation is finally taking shape with a new entrant, Jio, likely to buy Den and Hathway. Nisha has been picking up all of that. Nisha, seems like the deal is impending and the announcement may take place tomorrow.
Yes, this particular sector, Sonia, has been really itching for a consolidation, and Reliance Jio, which is the newer entrant, is going to play the role of a consolidator. So what we are picking from our sources is that very soon Reliance Industries, in fact, as soon as tomorrow, along with the results, they could be announcing the acquisition of 2 cable operators, Den Networks as well as Hathway Cable. We do gather that it could be an initial investment of a controlling stake buyout through fresh equity issuance, and therefore it will trigger an open offer. So over 70% stake buyout in both the companies and complete acquisition is what they could be really looking at. As far as the overall impact is concerned, there's a huge impact when it comes to Reliance Jio's operations, which is readying itself for a commercial launch of its big bang high-speed broadband services. For that, they require subscriber base as well as also the last mile connectivity for Jio Fiber operations to go through. So 20 million subscribers come with this, and on the other hand, as far as last mile connectivity is concerned, both Den and Hathway have the right of way, which could be very useful. But one thing to note here is that both of them have a different technology, so it will need to be gradually upgraded to really fiber and high speed, and competition is going to pick up. The heat will be on Airtel, Tata Sky as well as Dish TV. So that's going to be the big transaction tomorrow, Sonia.
All right. Well, on that note, let's take a short break. But the markets are doing very well, both equities as well as the rupee market. We'll talk about that in greater detail. On the other side, we'll also bring you an exclusive conversation with Ramesh Sopti, the MD and CEO of IndusInd Bank. Stay tuned.